we haven't really seen anything that gives us any indication that consumers are slowing down at all. And our RV business, for not only for the industry, but for us, is very robust right now. And, you know, you're hearing a little bit of chatter about some things that people are reading in the headlines, but we haven't necessarily seen it translate to less footsteps or less clicks online at all.
You have some earnings numbers coming out. I don't know how constricted you are to talk about it, but how's business? How's growth at your business trending?
So growth is pretty decent. I mean, we are having a pretty solid year, obviously, in making investments into growing our RV business. We're doing that through Gander and through some other acquisitions. But we feel really good about the fact that our files are up, our customer counts are up, and our staff is feeling really good about where we're going in the future. Lots
of things are up. I know you are never a guy who shies away from asking or answering the hard questions. A lot of things are up at your company, but one thing that's not is your stock. It's down a lot. Why?
Well, you know, the stock went out, I think, about a little less than 2 years. It went out at $21. It skyrocketed to $47. I think that part of the reason the stock is down today is I probably, in the last quarterly call, did a bad job in communicating exactly where our company is going and why we're making investments into certain things. And usually I don't struggle with my ability to communicate, but in this particular instance, I did. I think there's a little bit of noise around the industry itself and shipments. And there was a lot of noise around where the industry's inventories were. You look at Thor, you look at Winnebago. They are talking a little bit about a drop in shipments. I'm here to tell you that that is a temporary drop. We're not seeing any reason that the industry is on pause. And I think that analysts and people that buy our stock and other industry stocks are still scratching their head trying to correlate retail data and shipment data. Here's the simple answer that I'll give you, Tyler. This is the most important thing I do. We feel very good about where we're going with our business, and it's new for me. Being a public company is new, and I will get better at communicating where we're going, and maybe my old strategy wasn't as good as the one that I'll have going forward.
Marcus, this is Courtney. You've sort of mentioned it a little bit as you've tiptoed around talking about headlines. Thor says that tariffs are already having an impact on its business when it pertains to the cost of producing, selling, manufacturing the RV. Is that not something that you're seeing with Camping World? And what's happening to the prices that consumers are needing to pay for those RVs as a result?
So I met with a few manufacturers this week, and they're starting to see that their suppliers are starting to raise rates. And there's no doubt that tariffs could possibly raise prices a little. But from our standpoint, as we sell to consumers, they finance 180 months to 240 months. And so the impact of $500 on a monthly payment is $3 or $4, not enough to trip a consumer up. I think the manufacturers could potentially feel a little bit of pressure. Winnebago and Thor are really good at taking other costs out of their business to be able to absorb some of that. But we're the largest buyer of RVs in America, and unlike the automobile business, it is not regulated. So if you're a Ford dealer, you pay the same price for a Ford, whether you have 500 stores or one store. That doesn't necessarily apply to us. You can interpret what you want from that, but while there may be increases in pricing, you guys know me well enough to know that I'll be the last to really want to absorb that increase.
So a few dollars a month because of the cost of tariffs, so that's not too much. I would imagine, Marcus, then, that rising rates are a bigger concern for you in terms of the consumer and what they choose to buy in terms of the price level. Are we at a point where we should start worrying about this, about the impact?
I don't think so. I mean, really, you know, our industry is really affected by the availability of credit, not the price of credit. And granted, as the interest rates move up, it definitely changes the consumer's payment. We focus on driving an average selling price down so that you're financing $20,000 or $30,000 over 180 months. An interest rate going from 5% to 6%, it's meaningful, but it's not a barrier. Gas prices going up, meaningful, but not a barrier. The barrier to our industry is the availability of credit. And if you go back to 2008 and 2009, when the credit market dried up because of housing, Well, that was a real impediment to our business. You have qualified consumers with good credit scores walking into car dealerships and RV dealerships and boat dealerships. As long as there is credit available, the consumer wants to do it. And that's really the unknown quantity. Is credit going to disappear?
Let me go back to another thing that certainly did not help the stock a couple of months ago, and that was some accounting related changes that you made. You changed your principal auditor and accounting firm after some findings that were arcane, I think would be one way to put it, regarding internal controls. Are those issues behind you, and need shareholders worry at all about the state of either internal controls or any of the stuff that was associated with the change in accounting firms?
Right. So when we parted ways with Ernst & Young, they did provide a letter to the company that said there are no disputes or no issues to speak of, and we transitioned to Deloitte. Deloitte will be the audit firm reviewing our second quarter, and at this moment, we don't believe that there's anything of any kind that's a problem, and there's no dispute with the previous auditors. Anytime you change an audit firm, it's never going to be good. And the reality of it is that unlike on the profit where I can talk about everything, in this particular case, what I can tell you is no disputes over any accounting, but I want good service and I want a heck of a price. I don't want to overpay for inferior quality, and that sometimes could lead to a change. You know me well enough.
I do indeed. Let's talk now about something I think you can talk about, and that is the race this weekend. It was a monster truck race up at Pocono, which is, I've been there. It's a tri-oval. It's an interesting place to go see a race.
Yep.
Why do these races work for you and for Gander? And do you see yourself or your company expanding those relationships?
So about 8 years ago, we chose to take on one of three of NASCAR's biggest series. So there's the Monster Series, the Xfinity Series, which is obviously our parent company at CNBC, and then there's the Camping World Truck Series, three different divisions. And we want to make sure that we're getting a good return on investment, as any advertiser in the sports sponsorship space should look for. Camping World made sense because if you go to any track, you see camping throughout the infield. This weekend, we're announcing the transition of the Camping World Truck Series to the Gander Outdoors Series. And Gander Outdoors has been a very controversial acquisition strategy for our company. I will tell you, Tyler, that Gander Outdoors is nothing more than a competitor to Camping World that we control. And I believed that NASCAR presented a great opportunity to tell that story. You can see behind me that there are a number of RVs. I happen to be inside of a Gander Outdoors. And we wanted to create an environment where you can do hunting, fishing, camping, hiking, biking, and RVs all inside of one box. Where is the future of the consumer going? Online? And what are they expecting from the retail experience? And that's really why we made this huge investment into taking our company into the future. NASCAR is a great platform to just start to tell that story.